Imagine if you and your income disappeared tomorrow. What would happen to your family? In today's episode, we are having the hard conversation about why you need life insurance and why life insurance is income protection and not an investment. Hope you'll stay tuned.
Sugar Daddy Podcast, yo. Learn how to make them pockets grow. Financial freedom's where we go. Smart investments, money flow.
Welcome to the Sugar Daddy Podcast, where we help you build a clear financial plan so you can feel confident and in control of your money. If you are an OG listener, thank you for being with us and welcome back. And if this is your first episode with us, we hope you'll stay to the end and join us every week because we drop episodes every Wednesday. Babe, what are we talking about today?
Today, we are having that fun conversation that everybody loves to talk about life insurance.
Okay, I feel like we're just complete weirdos because I really like talking about life insurance because I am a planner and I like having a plan. But I understand why it's difficult for people to have this conversation and to plan for really what the worst case scenario would be. Like some people are just so avoidant that they literally just don't want to have the conversation. And I'm like, no, we're going to talk about all the hard things because you don't plan for the emergency in the middle of your house burning down. You plan for it while everything is still intact and calm and peaceful.
Yeah, I would say there's a couple of reasons why people are kind of hesitant to have the conversation. I think one, like you said, some people like literally think that like, oh, if I talk about death,
Like
then
superstitious.
something's going to happen to me because I'm talking
Yeah.
about it, which,
We don't subscribe to that.
yeah. And then also on top of that, like to be honest with you, the insurance stuff is a necessity. I 100% hard stop. If you're an adult and you have certain responsibilities, you need life insurance. However, it's not the fun part because the
Right.
idea is that like, you're putting money into these different types of insurances, whether that's even just like your car insurance, disability insurance, health insurance, stuff like that.
Your Apple Care insurance.
Yeah, but you're hoping that you never actually have to use
Right.
it. So people are like, oh, well, I'm throwing away money. And I'm like, I can understand where you're coming from because I don't like necessarily paying for my insurance. But I've seen what happens on the other end when you don't have those things in place.
And I mean, throwing away money is a little extreme because they're protections, right? You hope to not have to use your car insurance, but in the event that you do, whether it's your fault or somebody else's, you're glad that you have it because it will cover the things that you need fixed. It'll cover your rental car. It'll give you that peace of mind to know that, you're not going to be without a car for a certain amount of time. This is the same, but like to the nth degree,
Yes.
right?
Yes.
I mean, I have a sense of peace thinking about the insurance policies we have in place.
And that's
They
the
give
goal.
me peace.
That's the goal. Like, so you use insurance policies as a form of risk mitigation. So what are the risks that we're actually trying to cover in the scenario? So, for today's episode for life insurance, the main risk that we're talking about is someone passing away prematurely. Now,
Mhm.
this is, for example, like just use like Justin I's example. If I was to pass away tomorrow, obviously that's like the worst thing that can happen, but you also don't want to add a financial burden on top of your family because the income that you otherwise would have been bringing in is no longer there.
Right.
And that's the purpose of life insurance in regards to what we're talking about today mainly.
Well, and I know that we're going to get into it, but also not necessarily thinking about it as like the paycheck that's going to be missing, but I like to think of it in a way of in the worst case scenario, trying to keep our life as normal as possible, especially we have children, but this episode also applies if you do not have children, but you're not going to rush back to work, right? You're not going to resume your 9 to 5 if something tragic happens and unexpected happens to your partner.
Yeah.
And even, we have so many examples of people in our lives getting diagnosed with things that are unexpected and could be terminal. And so putting life insurance in place, hopefully while you're young, hopefully while you're healthy, that's the best scenario because you save the most amount of money.
Yes.
Um, but it's one of those things where you need to keep your life as calm and peaceful as possible in the chaos and thinking about like the life changes that you would potentially have to make if you didn't have that income coming in, or you didn't have that protection to say, you know what, I'm not going to go back to work for the foreseeable future, and I'm going to work on my mental health. I'm going to make sure that me and my kids go to therapy. I'm going to take care of the estate, so to speak. I mean, there's so much that goes into handling somebody's passing. You can't just go pick up and go to the grocery store and like have a normal life
Yeah.
after that. You just don't. Not for
Yeah.
a while anyway.
And the thing is, you like what I try to do for people is paint a realistic picture when we're talking about putting life insurance in place and how much you should have. Because when you're just talking about numbers, that doesn't really, hit with people. Like, oh, $1 million in coverage, $2 million in coverage. What is that? No, I need to talk about what it's going to actually look like in the event if, say you're a family of four and one of the spouses passes away. What does that look like?
Hmm.
So say you have two individuals, a husband and wife, that are making $150,000 each. All right. So we're equal on paper when it comes to
Hmm.
income. Like just said, one of them passes away. Do you think they're going to turn around and just continue working? Because I've heard people say to me, like, oh, well, if one person passes, they still make $150,000. That should be, a decent amount to help out with, paying bills. And I'm
It's a
like,
lot of money missing.
one, it's half the income missing, but then also not even that. Like, you think that your spouse is really going to go to work the next day?
And that your kids are going to be okay to go to school and that life is just going to keep going.
Yeah.
That's
The
crazy.
idea is that, like, in this scenario, you would want to be able to afford a surviving spouse the time to mourn and also take care of the kids without having to rush back to work because of fear of not having money.
Right. And even if there are no children, to take care of yourself.
Yes. Even if like I said, to a dual income household with no kids.
Mm-hmm.
Take care of yourself, take the time that you need, and then even just like some of like the detailed stuff. Let's say you have a mortgage and the mortgage is in both of your names. You could potentially lose your mortgage because you are no longer, you may not no longer qualify for that mortgage as an
Qualify.
individual.
Yeah. There's so many nuances to losing somebody unexpected that you really have to think about. And this is for the long term, right? If you have, again, let's use the $150,000 income example. If you have young children, the idea is how much income would that person have brought in over the next 10, 15, 20 years? It's not just let me get through the next year.
Yeah.
And so it's really important, and I know we're going to get into it, but it's really important to also think about the longevity of what that money can do over the years.
Yeah.
So, and we've both had very recently had people pass away that are our age, unexpected, and have left families behind.
Yeah.
And did not have life insurance in place. And that,
Everyone thinks they're invincible until
yeah.
you're not.
And it causes a burden. And you putting term life insurance, all we're talking about today is term life insurance, putting that in place.
Well, we are going to define the two different kinds, but the main one
That's
we're
fine.
talking about is term.
Yeah. But having that protection is loving the people you care about.
Yeah.
Hard stop.
Yeah. So kind of go into it, the first thing that people always want to wonder is who actually needs life insurance?
Mm-hmm.
For the most part here, we're talking about income protection. And, this is for any person that has any form of responsibility or somebody dependent upon them. So, for example, easiest one to think of is like Jess and I were parents. So if something were to happen to us, we want to make sure that our kids are taken care of. But then also, as you said before, if you are married or with a partner that you guys are financially dependent upon each other, you still need it in that scenario, even if you don't have kids.
Mm-hmm.
Now, one thing that is kind of can be up for debate is when you should get it, because think about someone who's maybe 25 years old, single, doesn't have kids, and let's just say they don't have any debt, nobody's financially dependent upon them. Then what you're actually thinking there is like, what kind of life do you want to live moving forward? So if you're someone that's like, hey, I do want to get married in the future, with maybe the next 5 years, I do want to start having kids maybe in the next, 5 to 10 years, then it can be very beneficial to go ahead and get a policy in place today. Reason being is that in order to get a life insurance policy, first, you have to be eligible for one. You have to qualify for it.
Mm-hmm.
So they're going to take into account your age and your health mainly.
Yeah.
Now, one thing that we know is as we get older, we can't predict the future. There are things that can happen from a health standpoint that could possibly make you ineligible for a policy
Mm-hmm.
or significantly increase the cost. And then also, as you get older, doesn't matter how healthy you are, the older you are, the more a policy costs. So the cheapest policy that you're going to be able to get is literally today
Right.
as an individual.
Well, and I want everybody that's listening to pause and just think about your circle, your family, your close friends, and the things that have happened as you've aged. I mean, I can say just for myself, right? I mean, we got our policies and then I had my thyroid removed. Then I had 2 C-sections. Now I've got, some autoimmune things. We know people who've been diagnosed with lupus, with MS, with um, you know, autoimmune things. And you kind of wake up and it came out of nowhere. And once you have that on your record, getting that life insurance policy is going to cost you more. So, yeah, when you're 25, the last thing on your mind, unless you've been having these conversations with your family, is I want to spend, you know, 30 or 40 extra dollars a month on life insurance, whatever it might cost based on that age and your health rating. But that's really the best time to get it
Yeah.
because, listen, shit happens when you get older and like your body is not the same. And we all know people who have had even cancers pop up.
Yeah.
I know several people with thyroid cancer. I know several people who've gotten breast cancer before they turned 35. I mean, y'all, we all know somebody. Okay. So,
And it's also very affordable
yes.
when you're younger. When you're young and healthy, it's very affordable.
Yeah.
Now the key is, like I said, making sure that you have the right kind of policy. But the idea is that you want to try to put these things in place when you can, and not necessarily waiting until you need them. Because
Mm-hmm.
at that point in time, it may be significantly more expensive, or you may not qualify because of things that have happened from a health standpoint.
Right.
Now, one thing also, for example, like we have policies on our kids.
Mm-hmm.
Now, the reason that we have policies on our kids is because it has a rider on it, which is an additional feature of the policy that allows them to get additional life insurance as an adult without having to go through medical underwriting. So we've already ensured that they're going to be able to get a certain amount of life insurance regardless of what happens to them from a health standpoint.
So it ensures their insurability.
Correct.
Right. Which is another form of protection because, again, we cannot predict the future. And heaven forbid something happen and then they, have a spouse and have children, et cetera. We want them to have these protections in place. And so it's the really thinking about the long term while also understanding that life happens, it's unpredictable, and we need to put these protections in place when we can. I mean, I was even talking to my brother about it because I know that he doesn't have life insurance. And, he's kind of the mindset of, well, I'll just wait. I'll wait until I'm married. I'm wait until I'll have children. And I'm like, boo boo, you are about to be mid-30s. Like, get it now because you're just getting older.
Yeah.
Get it now while you're healthy. Get it now while you're lean and fit. Get it now before you have something that pops up. And, he tried to battle me on it, but hindsight is always 2020. And we know plenty of people that are like, man, I should have done this 5 years ago you've had people that have gone through underwriting. They have reached out. They're like, we're ready. They've gone through underwriting, have gotten, I'm assuming, good ratings, maybe a good price, and then never moved forward. And then came back, 4 or 5 years later, and now the policy is 2, 3 times, or they've had some sort of health issue, and now it's like, ooh, this is going to cost you a lot.
Yeah, because I mean, there's a lot of things that, I don't think a lot of people realize. Like the biggest aspect of the cost for a life insurance policy is the medical underwriting.
Mm-hmm.
And that could be from like your current, physical shape. It can also be from different medical things that you've had happen in the past. I mean, even now, from like, things are showing up in regards to mental health aspects as well. So like even just things like ADHD, showing up on life insurance underwriting and, make that could be a reason for different costs when
Mm-hmm.
it comes to certain individuals. So that's why I'm saying like normally as you get older, you don't necessarily get healthier per se for most
Right.
people.
Yeah.
So it's like go ahead and put it in place, while you can.
Well,
Now,
and even if you do, right? Like if you're like on a health journey and you've lowered your cholesterol, you had high blood pressure, now you don't, or you've lost weight, like those are all positive things. But guess what? You can't change your age.
yeah.
It's only going to go up, and that's automatically.
And to be
going
honest,
to,
like there's a difference that kind of jumps for, normal intervals. So like in your 20s, going through your 20s, 1 year, 2 year in your 20s isn't a huge difference. It
Mhm.
makes a difference like when it hits the 30. Then like the
Mhm.
few years in between in your 30s, not a big deal. Then you see a jump at 40.
Yeah. So get it before those
Yeah.
milestones.
Now, somebody, like for example, someone who doesn't maybe need life insurance, if you're wealthy.
Oh.
So like you could technically self-insure if you're wealthy.
Yeah,
Now,
but the
granted, the wealthy
wealthiest
still
people, yeah.
use life insurance.
Yeah, okay. I
So
was gonna
like,
say, because it's literally a way to pass
yes.
down wealth.
I'm just saying, like, from a monetary standpoint, as far as like somebody being um,
Right.
dependent upon you from a financial standpoint, if you have enough wealth to leave behind, you don't necessarily need one. But like I said, they still have life insurance policies for specific reasons.
Yeah. But I mean, for the normal person, and if we're thinking about Black and brown communities, a lot of times that's where the generational wealth is lost, right? You have somebody, maybe they were first time homeowners in their family, somebody passes away, the mortgage was set to auto pay, nobody has access to it. Now we can't cover it because we're missing one person's income. And then now that house is in foreclosure, right?
Yeah, I mean,
There's
yes,
so many
yes.
like things that
But
can
we're going down a different path when you're talking
well,
about that now.
what I'm saying is, if you're really thinking long term and trying to also help set your family up,
But we want to stay on. You're going
okay,
deep down towards more like estate planning, legacy planning, and stuff like that. We're just going to stay on the high
okay,
level
okay.
aspect of life insurance. I hear you.
ok- I'm just listen. No more GoFundMe funerals.
Yes, I agree with
No
that.
more. Like enough. Stop.
Yes,
Stop. Get your life insurance. Okay, next.
but the next thing that people kind of go into is what type of life insurance do I actually need?
Mm-hmm.
And this is where life insurance gets a bad rap because
IULs.
just any. All right, so there's two main different types. There's term life insurance and permanent life insurance, and then there's various types of permanent life insurance where, like most people heard it, it's referred to as like whole life, like you said, IULs, VULs. There's a bunch of other ones out there. Okay,
Mm-hmm.
but as a high level overview, as far as a term insurance is exactly what it says. It is put in place for a certain term period. That could be 10 years, 20 years, 30 years, whatever it may be. But it's designed to replace your income in those high risk years, which is like your prime earning years where you haven't maybe acquired a bunch of wealth because you're still in your, early stages of your career, maybe, or middle stages of your career. But the idea is that it's either use it or lose it. So you have the policy in place for, say, a 20-year term, and you're paying for it, and the amount that you're paying for those 20 years is the same every year.
Mm-hmm.
And the idea is at the end of the 20 years, you hopefully didn't use it, obviously, but you don't have anything left over.
Which is why people are like, then I just threw my money
Yeah.
away.
It's kind of like it's kind of like you're renting.
Yeah.
It's the equivalent of renting. But the idea here is that it's a very low cost way to cover a high risk
Mm-hmm.
because term insurance costs significantly less than permanent life insurance. And most people should just have term insurance, to be honest with you. Most people should have term insurance.
Well, and you would say that if you're looking at getting one policy, it should be like your first policy should be term insurance.
100% to be a term insurance policy. And that's where the issue comes because then on the opposite side, you have permanent life insurance or whole life insurance. And it's just like it sounds, permanent. It is something that's going to be with you through the rest of your life. And at the end of the day, when you do eventually die, your beneficiaries will receive a payout as a death benefit from your policy. Now, while you're alive, a permanent life insurance policy, like a whole life policy, does actually grow a cash value in it that you can't access while you're alive.
Mm-hmm.
But the biggest thing I want to, kind of put a disclaimer on is that too often the issue is that whole life policies are sold to individuals who need a term policy.
Which is
And
where the scammy
yes,
part and the bad reputation comes in.
yes, and I see it all the time, and that's where that's where people get upset because I've seen people that 30 years old and they have a $200,000 whole life insurance policy when really what they should have gotten is a $1 million term policy,
Mm,
and that's where people are like, oh, whole life's a scam, whole life this and that. And then also, it's also often portrayed as an investment, and
yeah.
it's not. It's not an investment. You do not use a whole life policy as an investment.
Okay.
And that's the issue that I think most people run into is that whole life is not it's not a scam. You just use the wrong product in the wrong situation. And that's
Well,
the
but
issue.
is that because people get paid more. The person selling it
100%.
gets paid more selling a whole life policy than a term policy.
Yes.
And we've said this on a
I
ton of
will,
episodes.
but I'm going to preface this is that
Okay.
I think also too is that you have individuals that maybe don't have enough knowledge and understanding. So they're being taught this thinking that they're doing the right thing. So it's not
Sure.
always
Yeah, they're
that
trying to do
yes,
the right
it's not
thing.
always
and
that the
then-
person's trying to scam you over and make more money. They may genuinely think that they're helping you and they just don't have enough knowledge to understand that what you actually really need. Now also sometimes people come to you and just say, I want this.
Yeah.
I've had people come to me and say, hey, I want this. I want a whole life policy. I want this. I'm
I
like,
read about this. My cousin told me
I
about
don't, it's
this.
like, that's not what you need. Well, I want this. I'm like, I'm not going to give you that because that's not what you need. And I've had to do that. But like,
Mhm.
I have a little bit more knowledge. It's could be both ways.
Fantastic.
It could be both ways. It could be someone who's just trying to make more money. And it could also be someone who, just doesn't have enough knowledge and understanding.
Yeah. Well, and just for anybody listening, two things that I'll say on this, and we've said this before. Anytime you're working with a financial advisor, somebody who's selling you insurance, you should always feel comfortable asking what you're making on this. So if you're considering a term policy and a whole life policy, you should feel comfortable saying, hey, what's your commission going to be on this policy versus this policy? And if the person that you're working with is not willing to give you that information, that's a red flag, first off. Second of all, any insurance product that you have, somebody's getting paid commission. So your car insurance, your homeowner's insurance, your valuable property insurance, anybody who's selling insurance is making a commission. What I will tell you is that we are not keeping our lights on with your term life insurance.
No.
So if you are concerned about like lining somebody's pockets because, that's how no,
No.
you are not keeping our lights on with your term life insurance that you need to get for your family. So
I don't even
get
I
that out
don't
of your mind.
I don't even really track that. Like as far as like
As
when
income.
I
I've
take
never
into
heard you
account my income, like I don't that's
No.
not what I'm tracking because it's not a ton
Right.
at all.
So just, if you're a person for some reason, whatever trauma you've had in your past with money, you need to get that out of your mind because nobody is driving around in a Lamborghini off of your term life insurance policy. So
Yeah, and like I said, often the problem is with that is that the whole life policy is sold to someone instead of it actually being what they really need. Now, like I said, there are definitely scenarios where a permanent life insurance policy 100% makes sense. But for the vast majority of people, a term policy is what you need.
And don't, in most cases, because I know you love it depends, but in most cases, you don't need to get a whole life policy before you have a term policy.
Correct.
So also
no,
the order of operations matters here.
You should definitely get a term policy beforehand
Yeah.
for most people.
Can we just briefly go back and talk about underwriting? Because I think that might be, you see a lot of commercials right now of like, you can get this much insurance for $30 a month with no medical exam. Is it one of those like you get what you pay for?
Well, it's not even
or
that. Like
what would you say?
it all depends. Like one, it depends on age,
Mm-hmm.
the amount that you're applying for,
Mm-hmm.
and then also they're going to pull your medical history first. So if they see something in your medical history,
Even though it says no medical exam, they're still going to pull your medical.
So no medical exam means that they are not going to, do. So what
Like
we consider a
blood
medical
work and
exam is that they're not
urine?
going. Yes, they're not
Okay.
going to necessarily have you draw because sometimes you have to have a somebody come out and draw blood and take a urine sample.
Mm.
But they're saying no medical is that they're going to still pull your medical records because
Oh,
You don't
I don't
want-
think that that's clear.
think about it this way:
I'm not
If
going to name
someone's-
the company,
if
but
someone-
y'all
if-
seen the
if someone's
commercial.
ill applying for a life insurance
totally,
policy.
yeah.
So they're going to pull your they're going to pull
Okay.
your medical
Bare
records
minimum,
for
they're
everything.
gonna say
Yes,
that. Okay.
100%.
Well, I think that's a good call out because I don't know that most people would have assumed that. They see, oh, I can download this app, apply for life insurance. It's going to cost me $30, a month, and I'm going to have the protection that I need without a medical
And like I said,
exam.
I mean, like the way that they're basing it off of is for the majority of people that are looking to actively get a life insurance policy, they're not going to fall in that bracket
Right.
because they're normally quoting someone that's probably they're basing that probably off of someone in their early 20s who's a completely healthy,
But the
fit.
people in the
individual.
commercial look like they're mid 40s.
I can tell you, I'm telling you, as
I know. No, I
as
believe
someone
you.
who, has this, that does this for a living, if you're in your 40s and even if you're the fittest, healthiest person, and you're looking to get $1 million, $2 million, it's not going to be $30
Right. Okay. Well, I think that's a good
for a
call out
20-year
because-
term. But also, they could also be misleading. They could be saying it's a 10-year term.
Yeah.
So, like I said, you got to take some nuance there in regards to what it actually is that that they're
Mhm.
specifically selling to you, because you'd be very surprised that once you go through some of those, you're like, oh, I have all these additional requirements now because
Mhm.
you don't fit into that box that they were talking about. That it's
Right,
going to be
right.
the easiest way
And
to
then
do
you're
it.
like, "Wait, they said $30 on the commercial and now it's 160."
Yeah, you're not. I mean, like I said, like if you're someone that's my age,
Mhm.
42 years old, about to be 43, and you could be the top, 1% of health wise, and you're getting, say, a million, $2 million, and you're going to probably get it like a 20-year term.
Mhm.
It's not going to be $30.
Yeah.
I can tell you that already.
Well, let's talk about the 1,000,000, 2,000,000. How do you decide how much life insurance you should have? And I know we've talked about this, but go ahead and address the people who are like, "Well, I'm already overinsured."
Well, okay, so first of all, you can't be overinsured. It's literally impossible. Reason being is that an insurance company at the end of the day is still a company
Company
trying to make money, and they're not going to insure you for more than what they deem you to be worth.
worth.
And your worth for in their eyes is based upon mainly age. So you have life expectancy and current income.
Mhm.
So, that's what they're going to base it off of. So they're not going to, like, if they deem you to be worth, $2 million, they're not going to give you a policy for four.
Right.
That's not just not how it works.
Yeah.
So you can never be overinsured.
But people say
Now,
that.
now you can be more insured than you care to pay for.
Oh, sure. Okay.
And that's really what it is. It's
Yeah,
like,
like, I don't wanna pay for this policy, so I'm gonna get less than what's recommended.
yeah. So like, and there also can be some nuance in regards to it. So for example, like, what are your actual financial responsibilities? Having one kid as compared to having four kids,
Oh.
it's going to make a difference in regards to maybe what the amount of life insurance that you need. So there is some individual aspects there. I would say for, like, say you're 30-year-old who's not married, doesn't have kids starting out with, maybe you're looking at 10 to 12 times your income to start out with.
Okay.
All right.
That's kind of like the base level is
Base
like
level.
10
Yes.
times, 10 to
Yes.
12 times.
However, at that age of 30, you could technically, depending on like your income and your situation, you might be eligible for up to like 25 to 30 times your income.
Oh, which if you can get that while you're young and healthy,
But it,
again,
but it also depends. So, and the thing is, like, you can't just take life insurance in one silo,
okay.
because you want to do the financial planning aspect and look at everything else. So, for example, like, think about it this way: most people are on a fixed income, a fixed budget.
Mhm.
So, if you're allocating all this excess, so let's say you have this 30-year-old who's not married, doesn't have kids, and they're trying to get 30 times their income, which they could be eligible for.
Mhm.
Do they necessarily need it at that point? Because
Right.
maybe that money that they would otherwise be allocating towards that life insurance policy, some of that would be better investing more into their 401k plan or an IRA.
Okay.
So just because you're eligible for it based upon your situation doesn't mean you necessarily need it.
Okay. Which
N-
is why it is important to talk to somebody
Yes.
about, which you're probably not going to get when you sign up for life insurance through an app, right? Like,
I honestly, I've never gone through one, so I'm not going to like get on this
yeah,
soapbox and say that it's incorrect. I don't know.
but maybe talk to somebody.
Yeah, I think it's worth having a conversation because, as I said before, like, when I put life insurance in place, I get a commission from the life insurance company. So I don't get any money per se from you sitting and talking to me about it. Now, like I said, you have to be with a reputable person who's really looking to do and put in place what's best for you.
Right.
But you can 100% benefit from talking to an individual that has the expertise.
Yeah.
Because, and that also, like I said, it changes with your individual situation. So, like, say the 30-year-old, now I'll move you up to 40 and you're married and you have kids. You're still eligible for possibly, 20 times your income. And that might make sense in that scenario because you have more people that are financially dependent upon you.
Mhm.
And also, you might be bringing in more money. You have more responsibilities. Now you have a mortgage. You
Mhm.
might have, other, still student loans and stuff like that. I mean, student loans would go away, but uh, but it's one of the debts that we always just pop in our mind. But
Yeah.
you have a mortgage and everything else that you have to help out from a financial standpoint. So it really depends. But 10 to 12 times your income is like where it starts. And then the nuance comes as you as an individual, what your specific needs are.
So, and what I'm hearing there is you might need to look at your life insurance and your coverage as your life progresses.
Oh, it's never something that you're just going to set in place to like 30. and forget about and be
Yeah,
done.
set it
Because
and
you're gonna
forget
have
it,
to,
yeah.
reassess your situations as you progress through the different stages of life.
And potentially your beneficiaries. We just released
Yeah.
something about, hey, maybe you were married, now you're divorced. You might want to update that beneficiary. Or you went from not owning a house to owning a house. Well, that's a much bigger expense. You might need to increase your life insurance then, going from one child to multiple children. All of those life stages warrant a review.
And also, here's the thing too, is that like where it can be beneficial, where you actually have someone like a financial planner, life insurance agent that you build a relationship with, and they actually keep in contact with you because they also know when you have these stages change. So, for example, I have friends of mine that have gotten divorced multiple times, and I know this obviously because they're friends of mine. And I'm like, hey, we need to change your beneficiary. You're no
Hmm.
longer married to this person.
And though they would not have thought about that.
Exactly.
Yeah.
So it's helpful sometimes to have someone that is reaching out to you, those touch points to make sure that, do we need to update anything? Has anything changed? Because
Right.
I
Well,
just like,
and your income, right? Like as we're aging, we obviously, in most cases, hope that our income is also increasing year over year. And so if you put a policy in place in your late 20s, early 30s, and now you're mid 40s, and you've, increased your income significantly, that matters.
yeah,
And so all of those things need to be taken into account when you're thinking about, when to put it in place and then when to update it. And that's not to say, I mean, you're not recommending that people update their life insurance on an annual basis or
no,
anything
no,
like
no, no, no,
that,
not making
but
necessarily changes to your
right.
life insurance, but just making sure that changes, that there's nothing we do need to change. Because,
Mhm.
like, for example, like, as I said, like having one kid and say you're renting.
Mhm.
Now a year passes, or a year and a half passes. Now you have another kid on the way and you just bought a house.
Yeah.
You have more of a
Much
financial responsibility.
life. Yeah. Okay. I think too one time you and feel like this kind of pulled on the emotional heartstrings of the reality of what could happen in the event that you don't have life insurance, right? So if we're thinking about maybe a stay-at-home mom, usually the mom is the one who stays at home if you're in like a singular income household. The husband unexpectedly, you know, passes away. There's no life insurance. So, how do you afford where you're living? Now, you might need to change where you're living. That's going to then potentially change where your children are going to school. Now, they have to not only grieve the loss of a parent, now they're having to assimilate into a new environment, meet new teachers, make new friends. Like,
I mean, you might have to make a completely different life. Say these kids are involved in activities that cost money. Now they're no longer a part of the soccer team.
oh my
They're
gosh,
no
yeah.
longer a part of the dance team. Like,
Those are, I mean, and I don't think that most people think about those details. But if you can, the point is, if you cannot afford your life the way it is right now without life insurance, then you need life insurance.
well, like I said, the way that I think about my life insurance is that if something happened to me, obviously outside of me not being here and having to deal with that, I don't want anything else in your life to change.
Right.
Like,
Unless I want it to.
yes.
Yes. Yes. Absolutely.
Yeah. Now, kind of moving into, we also like to I like to point out with individuals the hidden cost of waiting. Because that's the biggest thing. People want to wait, wait, wait. If I can go back in time,
Do it
we
tomorrow.
got our
Right.
policies. I was in my early 30s when we got our larger ones,
Mm-hmm.
and I would go back. I mean, I wish I would have gotten even a few years earlier in my
Oh my
mid to late
gosh.
20s.
Yeah.
And like I said before, waiting costs more. Even if you're healthy,
Mhm.
it's going to cost more. Now, for example, if you're 27, you wait till 28, is it going to be a significant difference just from an age standpoint in cost? No, but technically it is going to cost you more. And then you also are leaving up open the possibility of anything that changes in your health that could potentially increase the cost or make you ineligible altogether.
Mm-hmm. Well, and y'all, things happen, right? These autoimmune things pop up. You could be, I mean, even getting into an accident, having, surgeries, things like that are all going to weigh into your overall health rating or eligibility.
Yeah.
And so those are the things, every day that we make it another day, something terrible could happen. And that's just the reality. I mean, gosh, I saw something, we had this like snowmageddon. I saw an article in from Charlotte where a dad was sledding with his kids and got like run over by an ATV. Like, accidents happen,
Yeah.
Like, you don't think that you're gonna go out with your kids and go sledding during, like, a snowstorm or whatever. It wasn't a snowstorm, but,
Yeah,
like,
and
we
that's
were all out for
and that's what I wanna point out, the term insurance is not because you died of old age.
right.
It is the
It's literally
premature
the
deaths,
yeah,
and that's what the main thing that is covering. It's not covering the 87-year-old man who passes away. No, that's not what we're talking about. We're talking
right.
about the 45-year-old dad who was in a car accident. We're talking
Mhm.
about, the 35-year-old mom who same idea, car
Yeah,
accident.
yeah. I mean, and that's the reality, and no, we don't want to pay for it, but if and when that policy ever needed to be enacted, I know that nobody would ever regret whatever the cost is to then get an influx of money that can give you and your family peace and support to handle what you need to with the time that you need.
And also at the end of the day, like, the way that life insurance fits into your bigger financial picture is that it's honestly the foundation of it. Majority of anything else that you're doing from a wealth building standpoint is a long-term play. It's not going to be tomorrow, it's not going to be next week, it's not going to be next year. It's going to be years in the making. However, these things can completely demolish that financial plan. It can happen today, can happen tomorrow. And that's the idea behind, life insurance that you're putting in place. It's the foundational block. And to be honest with you, if you are an adult with certain responsibilities and you don't believe in putting life insurance in place, I don't want to work with you. I
Shame on you.
strongly dislike individuals that don't take care of their family and the needs that come with that. If you don't want to take care of that responsibility, don't have kids. Don't have a wife. I've
Yeah, you get very fired up,
because I've met
which Brandon doesn't get fired up about much, you
because I've
guys.
had a few encounters with men, and it's not really I've normally it's not women, it's men who are like, oh, I'm just going to get this small policy, or I don't need anything at all. She'll be fine, and I'm like, I'm good. We're not working together. You
Ooh.
can get a policy through somebody else because like that's just irresponsible and selfish.
Mhm. That's really sad. Like, if you, as a spouse, as a parent, the one thing you should always want to do is to make sure that if you are not around, your family is still taken
Yeah.
care of.
Now, there's something completely different if we look at the numbers and in your financial situation, you can't afford the full amount that you probably should have. That's a different scenario. I'm
But
talking
better to
about,
have something than
yes,
nothing.
but I'm talking about, yes. And that means even more so that you need the life insurance in
Yes,
some aspect
exactly,
because
exactly.
but I'm talking about people where we've looked through the numbers. I've gone through their entire budget. They have the money to put towards it. They just don't believe in doing it. I'm like,
Yeah.
I can't understand
Let's
that.
let's talk about people who get life insurance through work. Typically those are, maybe 1 to 3 times that person's salary.
It's a good start, never enough.
Okay, so even if you have it through work, you should have
Oh,
a supplemental, well, because once you leave, most of the time, I mean,
yes.
maybe you can port that policy, but most of the time it's like you leave the company, you leave the policy,
Yeah,
right?
so I would always say, like, most employers have 1 time your salary as the base, and you don't even have to pay for that.
Mhm.
So you should 100% take advantage of that
Opt
because 'cause you're not
in.
paying for it.
Yeah.
Now, sometimes they allow up to 3 times. I've even seen up to 3 times your base and not
Yeah.
have to pay
Well, and
for it.
sometimes it depends on what level you are in the company.
Correct.
So,
But often it's either, completely paid for or highly subsidized. So I always say, like, "Hey, let's go for, like, the place where we can get it the least expensive first. Let's
mhm.
start there."
Mhm.
But 3 times your salary, even 5 times your salary is not gonna be enough normally.
Right.
So that's a good place to start. And as just pointed out, like, it is a policy that's tied to your employment. Now, sometimes if you were to leave that employer, it can be called what's called portable, but then also the price increases with that.
Because it's no longer subsidized by your employer.
Correct. So
Yeah.
it might just be, go ahead and get the policy that you have through your employer, but then also have an individual policy that has no depending upon where you're employed and it's your own policy.
Yeah.
You can also often do a lot more customization on individual policy. A policy through your employer is the vanilla basic and everyone's getting the same.
Yeah.
You can do a lot more customization, a lot more additional features on the term policy when you have an individual policy.
Yeah. Okay. All right. So get what you can through work, but it's not enough. So definitely supplement with an outside policy. There is a cost to waiting. So don't wait. And really, the call to action is if you do not have life insurance, you need it.
Yeah.
So, you know, you could reach out to Brandon.
And like I said, I mean, reach out. You could reach out to me, and I mean, even bare minimum, I don't care. Hop on the website, so one of the websites that give you a quote, so you can at least start to get an idea.
Mhm.
Like even bare minimum of that, I think it can be very beneficial to reach out and talk to an individual. But sometimes that could be the barrier for people. Like they're just nervous to talk to a person, and they much rather do it online. I much rather you get something than nothing.
Do you have any suggestions on where, if somebody's not gonna, like, reach out to you to
I mean,
help?
Ethos is the one that most people are familiar with. Now, I've never
That's the one with all the
yeah.
commercials
Now,
right
I've
now.
personally never gone through it, so I'm not. This is not a advertisement for Ethos. We're not getting paid from them.
They do
I've
not
never
sponsor the
personally done it. I've
podcast.
never personally done it, but they are one of the major ones out there where you can hop online and you kind of find that out. And
Okay.
honestly, what they're doing is they're getting your information and then they're just connecting you with other carriers. Yeah, they're
Brokering
connecting you
you
with other
out.
carriers. That's really all they're doing.
Oh, yeah, okay, okay. So
Ethos themselves is
you
not
might
a
as
life
well
insurance
just reach
company.
out to
Yeah,
Brandon.
because Ethos themselves is not a life insurance company.
Oh, interesting. So they're a broker.
Yeah.
Ah, interesting. Okay. Well, thank you for having the hard conversation with us today. We know some of these necessary conversations are not comfortable for many people to talk about, but they are necessary. It's part of adulting, it's part of taking care of your responsibilities. And so look at the policy that you might have through work, but understand that that is not enough. And reach out to Brandon, take a look at Ethos. And if you don't have life insurance, let's make sure that that is something that gets added to your to do list and is at the very top because it is important and it is the right thing to do. All right. Share this episode with a friend. If you have not yet left us a rating or review, please do that. It helps other people find the podcast. And we know you're listening. We get the stats, y'all. So thank you for being here, but also leave a 5-star rating and a review, please. It means so much to us, and we read every single one of them. We will talk to you soon.